Morning, it's Monday, March the 10th. I'm Jason from DayTradeIdeas.com, and we're looking at some stock markets this morning. E-mini S&P chart I've got here. This goes back to May 2013, so we're just coming up to sort of 10 months on this chart. You can see this trend line we've got here, which we try to break above just at the end of December, but other than that, the trend lines work really well. And you can see, if I just open this up now, we're in this channel really. You can see this channel with this lower trend line here and this upper trend line here reaching the top of the channel. We've hovered around there for a good 3-4 days last week, all of last week really, as we made new highs almost every day. But notice how we didn't really manage to close above that trend line. And of course this morning we're a lot lower, so I think this is sort of indicating that we're rejecting this trend line after giving it a good going over for 3 or 4 days. We're done, we've given up. We should start to hit some profit taking. Of course we're overbought on the daily chart, on the stochastics, and the MACDs even. Well, they're not turning negative now, but you can see in a couple of days time it won't be long before they are potentially turning negative. Histograms obviously narrowing. So all in all, I think it's probably a little bit too risky in the very short term, at least, to be holding longs in this. We could see some profit taking this week. We already are, in fact. So just keep an eye out. Levels to look for. Well, 1867 is sort of 1868, 1867 is immediate support. We've got a high here on this day of 1866.5. What's that? That's 28th February. So that's actually February highs. So watch that 1867 area. We start getting below February highs of 1866.5, then that's going to sort of add a little bit of pressure, as you can imagine. We've got some good fib support around the 1855 area, 1855, 1850 area. So I think that would probably be the next main downside target if we start to break below 1866. So just keep an eye out for that. Not expecting a huge plunge, but certainly do expect some profit taking in the E-mini S&P this week. On the subject of stock markets, the European stock markets have looked weaker than the US. They haven't been able to break to new highs last week following the US, and you can see this DAX. I don't really think this is actually the weekly chart of the DAX. I don't think this is a double top really, but you can certainly see the DAX is running out of steam. We've got some on the weekly chart here. We've got some trend line support here. This trend line goes back to June 2013. So we're just testing that now. You can see the trend line comes in at around 92.70. Today's low, today's low is 92.60. So we're just holding on to that, but won't take much to break through there and add some more corrective pressure. Again, same as S&P, seeing it more as a correction than a start of a bear market at this stage, at least, until we see something more develop. But wouldn't take an awful lot to send us down to the 90.20. 89.90 area. That wouldn't be a huge move for the week. It wouldn't be out of the question, at least. Anyway, it's only sort of 300 points lower. So just be careful. Watch that for this week. See if we manage to get down here. But that's quite good support, and that's quite a much longer term trend line. So I'd suggest that that's probably a good buying opportunity shorter term, and we'd see a rally off of that point in the DAX. That's it for the stock markets today. I'm Jason at DayTradeIdeas.com.